Hello everyone and welcome back. In today's video we are going to talk about a very important tool to technical analysis, and that is using lines of support and resistance. Remember, if you like what you see here, please like and subscribe, and with that, let's talk about resistance and support. So simply put, resistance is an area, in this case, a certain price level where the price action has a difficult time penetrating and exceeding above a certain price level. Likewise, a level of support is the same thing, but the price action will not break below a certain price level. But the big question is, how do you find these price levels? Let's go ahead and look at an example. We're going to go ahead and look at Sunrun, ticker symbol RUN. One of the things I have to specify before I continue, these lines do not represent the exact dollar amount. Depending on the stock or crypto you're trading, the price level can be several dollars. So it's basically, think of it as price zones. And like I said, depending on the asset, that can vary in size. One of the first things I do is I put a horizontal line on the top of the all-time price high, because that's likely going to be a possible area of resistance. You can see here I also put lines on other highs as well. If we zoom in, we had a top here at around $70 around the end of December. We failed to exceed beyond this $70 zone. It went above it, but then quickly was rejected. And then it went below the $66 zone, but then came back up. So it found a level of support at this $66 zone. And let me show you where that came from. That came from the previous high back there around November in that price area. So generally speaking, when the price action breaks above a certain level and stays for a longer period of time, that level will then act as support, which it did for the $66 zone. You can also see that before we broke this high of $70 back in early January, there was some resistance. If you zoom in, it went above here a little bit, got pulled back down, then we started hitting it a couple times, 3 more times, and then we finally broke through. Then it broke through another high that happened back in October with ease. Now going back, notice how the recent dip, it found support at the $70 zone that used to be the high back in late December. It broke through it, but was quickly brought back up. So when the price action goes above a price level and sustains itself above that price level will then, which was once a line of resistance, will now act as a line of support generally. That does not necessarily mean that it won't break. Here we had a price level of around $79. This was again the previous high back in October that was mentioned earlier. We got a rejection a couple of times, and then finally it did break through that line of support, then finding a new line of support at the $70 zone. You want to find price levels where the price action is having difficulty breaking, whether it's support or resistance. The easiest way to find these lines is using, as you can see, the previous highs. Moving on, I want to now talk about a sideways trading channel. A sideways trading channel is where the price action constantly bounces around between a level of support and resistance. There are some traders who only trade sideways trading channels. Here we're going to go over a quick example. See, using Netflix as an example, we can see rejection at this $555 zone multiple times. 1, 2, 3. Then we get it here again. It may break through here. But how you would trade a sideways channel, you would buy or enter the trade here, and then be prepared to sell here if things do not go as planned, if it doesn't break through this level of resistance. And you can see it didn't, went back down, found support again. You'd probably buy back in here again and be ready to sell at this area right here around the $550 zone. The level is around $555, but I would probably set up a trailing stop loss just in case it does break through, but then if it gets rejected again, then the stop loss would activate as it goes back down to find its support. This is a great example because it's found its support multiple times in this example, and then it's been rejected multiple times on the $555 zone and went above it for a brief period during earnings, but then quickly went back down soon after and is now retesting this resistance again. So again, buy at the support if you're going to play these, and then get ready to sell at resistance. There are more than just horizontal lines of support and resistance, but there are also diagonal lines, and I'm going to go over some that are known as triangle patterns. First, we're going to go over ascending triangles. An ascending triangle is where the price high remains at the same price level while the lows are becoming higher. An ascending triangle also is usually viewed as bullish, so most of the time it will break at the upside towards the end of the triangle. Of course, that isn't always the case. It is not 100%. Now, a descending triangle is where there is a level of support, however there are lower highs. Usually this indicates a bearish sign to the downside. Again, this isn't always the case. We're going to go ahead and look at Ethereum as an example of an ascending triangle. Here we have a area of support going to the upside, and here we have the same price level, and it keeps getting rejected here at the $1,418 zone. Got rejected 3 times. Now again, you can see this level of support that is steadily rising and getting higher. You had it break through, but it was quickly rejected after a little bit of time and went back into the triangle. Now, generally speaking, when this happens, it's usually seen as a bullish sign, and it did break through this pattern once it got tight enough. So you'll see it get tighter and tighter and tighter, and then eventually it will either break up or break down. In this case, like I said earlier, or just said, it usually indicates a bullish signal. And in this case, it was a bullish signal because it broke through and then reached higher all-time highs. We're currently in this area now. Now, using wicks as an example of a descending triangle, we have the same level of support, same price level, $242. We see it touch it numerous times. It goes in this area multiple times, like 1, 2, 3, 4, 5, 6, 7, 8, about 9-ish, 10 times. However, you see the highs are getting lower and lower and lower and lower. Eventually, it like coils up like the other triangle, like the ascending triangle, and then it makes the move either to the upside or downside. In this case, it went to the upside, which is rarer because usually descending triangles are seen as bearish and likely to go to the downside, but again, it's not 100%. So when you see this pattern starts to coil up, be ready for a move to the upside or downside. So some people will buy right here. If it does break out and breaks the pattern, you would have made, let's see here, out at this candle, that'd have been a little over 5% over 8 days. And if it broke to the downside, you would set a price target around this area below what used to be the level of support. If it went to the downside, you would have opened up a short position in this zone. Now there is even more than that, like wedges and symmetrical triangles, but we'll save that for another video. I will provide some links down below for those who want to read more about these patterns and support and resistance. Well, that about wraps up today's video. Thank you for watching, and until next time, thank you.